Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Hey, what's up? How are you?
All right. Want to check up on what's going on with Bitcoin? Let's take a look. The Bitcoin price, XBX index, is currently trading at $46,534. Bitcoin is up about 4.4% over the past 24 hours, and the CoinDesk Ether price, ETX index, is at 32.33. ETH is up over 4% for the day, and the new DFX CoinDesk's DeFi index is trading at 713. DeFi also shooting up almost 5.5%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So we had a bit of a pullback, some profit taking happening in the crypto markets yesterday, Lawrence, but it appears we got the bounce back. What's going on?
Yeah, we had, the interesting thing is that we're seeing these flows happen during still a period of relatively light volume. If you go back and look at, we track 8 particular exchanges at CoinDesk, and you look at the 30-day volume, the previous 30 days, about $2 billion on average every day. If you went to mid-April, 30-day volume, like mid-April, was about $3 billion a day. So, we're about a third less than where we were before. And yet we're seeing these big moves. And mind you, by the way, that volume that happened, that was when the price of Bitcoin was another $10,000 higher than where we are today. So this kind of like this light volume moving the market, and we can't quite tell if this is FOMO, right? So all these retail investors are seeing these 1 or 2 big moves and they all jump in and that moves the price up. But you know what? If that is the case, people should watch and be very careful, because that also provides an opportunity for sellers, big sellers, to come in and sell out to the retail market. So keep an eye on this stuff.
All right, interesting to see what those movements are all about. Emily, also you're looking at some CBDCs.
Yeah, I have an article out this morning on CNN Business, just looking at kind of the argument for a digital dollar. And this is just, this past week we've been talking about nothing but the infrastructure bill. But I think the digital dollar conversation is something that's going to come up again in the fall, whether the U.S. needs a CBDC or not.
Yeah, and we're expecting a report coming out of the SEC, so that should be interesting. Looking forward to what Gary Gensler and the team have coming forward. All right, well, FalconX, a crypto trading desk focused on institutional clients, reached unicorn status Tuesday with a $210 million Series C funding round. The 3-year-old Chicago-based firm saying it is now valued at almost $4 billion. Joining us now to discuss is FalconX CEO Raghu Yarlagadda. Welcome, Raghu. So let me just confirm, are you guys basically an exchange for institutions? And you started during a crypto bear market after only 3 years as a startup. How did you grow so fast?
First off, great to be back, Christine, Lawrence, and Emily. Thanks so much. So yeah, we're very fortunate and excited to become one of the most valuable institutional crypto companies. So to your question, what happened over the last 3 years? First off, when we started, we were in quote unquote a bear market. And a lot of investors, friends, family are like, why are you starting a crypto company right now? One of the things that I've seen in my previous life, and some of the brightest engineers that I worked with in the past and from Google, we believe that tokenization is a much, much broader trend for the next decade than what we are seeing even now. So with that confidence, we came in. And another unconventional decision at that point was institutional crypto was not hot at that point at all. But we saw clear data that as the asset class becomes mainstream, institutions are going to be dominating the volumes, which we see today. So for those 2 reasons, we started as an institutional crypto company at that 3 years back. Over the last 1 year, Christine, to your question, our volumes grew tremendously. More importantly, our revenues grew 30 times with very, very strong margins. We have been profitable all along, and we also have a diverse set of products to actually help us be much more immune to volatility. So it's been a fascinating ride.
So, and to the first question, just to confirm, you're an exchange for institutions. Is that what it is? And so you're seeing just a lot of institutional interest, and that's what is driving business.
Yeah. So we are a one-stop shop for institutions. By that, what I mean is we have two major product lines, which is trading and credit. For both these product lines, we sit on top of a variety of liquidity venues. We sit on top of exchanges, OTC desks, market makers, and miners to pull really good pricing using our technology, and we give it to institutions. So specifically, we sit on top of exchanges, and the institutions come to us for two things. I need really good pricing. I want customizable interfaces for this pricing across trading and credit product lines.
So congratulations. And just to follow up on this question about being an exchange for institutions, my understanding is that your investors include Coinbase and Fidelity. Is that correct? And can you just explain to viewers, like, I guess on the surface it would look like there would be some overlap or some competition with those businesses, right? Because they also have institutional services. So is that the case, or like how do these companies differentiate themselves on the institutional trading landscape?
Yeah. As we're evolving towards a brokerage, Emily, taking some cues from the traditional markets, we see a nice, healthy play between exchanges and brokerages working with each other. There's a lot of synergistic elements in the traditional world. We see the exact same evolution happening in crypto as well. Why do institutions need brokerages? For two things. One, brokerages are connected to multiple venues. Number two, they're much more institutional centric. Number three, credit services can be spread across multiple different venues. So for those three reasons, we work very synergistically with all these different exchanges. Yes, we're very fortunate to have Coinbase and a subsidiary of Fidelity as an investor.
But there must be some areas where there's overlap or competition, no? And at least in some sort of areas of business. Like I imagine there are some services that you are providing that are similar to those businesses, right?
Yes, there are services that are similar. There is no question about it. But I think where the services are very differentiated is the type of institutional personas. Institutions deeply care about institutionalized workflows. By that, what I mean, Emily, is they want to not only get really good pricing across different venues. Going to one venue doesn't guarantee you really good pricing. And that's extremely important for institutions. The second thing, not only do you get this pricing, but you want to wrap this pricing with credit products. For example, if Emily wants to settle in 10 days, not T plus 1 day, which is the normal, we can facilitate that. So for those reasons, definitely institutions are preferring brokerages, and that era of brokerages is beginning to kick off.
So Raghu, welcome back. Know your customer and anti-money laundering is a big issue in crypto for crypto exchanges. Granted, you are institutional focused. Nonetheless, some of the exchanges you might be dealing with are dealing with retail. Do you think regulators are doing enough when it comes to anti-money laundering and know your customer rules, enforcing it on exchanges? Do you think that they need to do more to enforce it? And what do you think of some of, for instance, these exchanges that might be skirting the rules on a big scale? What's your take on this?
Yeah, that's a fascinating question, Lawrence. I mean, a lot of institutional customers are beginning to ask that repeatedly. I mean, for example, one of the largest hedge funds that we work with, that was their core focus yesterday when we spoke with them. And why is that important? First and foremost, it is very important for the space to be more regulated, for institutions to feel comfortable. And the most recent limelight, whether it's in the form of infrastructure bill or different comments from regulators, that's actually becoming a positive sign for the industry because crypto is now mainstream and regulators are actively considering about how to foster innovation while making sure it's safe for everyone, investor protection as they call it. So for these two reasons, institutions do feel comfortable that regulators are coming in. To specifically answer your question about KYC AML, it is extremely important in that, first and foremost, blockchain for the first time offers tools that can make your money laundering enforcement so much better than the traditional world. For example, in the traditional world, a lot of times money laundering is just a spot check, right? As regulated by the government as what your firm defines. But institutions like FalconX, I mean, we do continuous money laundering because we constantly watch blockchain for every single transaction an institution is doing. So to answer your question, yes, regulators are coming in, and that is important for institutions. Institutions care about KYC AML being done properly on these venues, exchanges and us, and the sensitivity is increasing for sure. If an exchange is being not too straightforward there, they're moving away from these exchanges. We are beginning to see that. And exchanges can definitely do more. And it's great to see some of the best platforms actually taking proactive steps to do continuous AML, including FalconX.
So somewhat related, a recent analysis done elsewhere showed that about a third of all Tether went to Cumberland, another third went to FTX. Do you guys have a preferred stablecoin that you use on your platform? And if so, why?
Yeah, we've seen that trend, Lawrence, completely aligned and agreed with that. We see a lot more institutions being more comfortable with USDC, especially the Asian institutions and the European institutions. The US institutions and the European institutions. Some of the Asian institutions definitely do work with Tether, but we see USDC growing much, much faster. Part of the reason is the transparency and the guidelines that USDC recently announced.
Super interesting. I want to bring up this chart from KPMG. They recently came out with a report saying that investment in blockchain and crypto the first half of 2021 exceeded the total for each of the previous 3 years. Moreover, the total was reached from a smaller number of deals, pointing to a greater average value for individual transactions. Are you seeing this play out in your fundraising experience? Is this a sign of a more mature market?
Definitely, we saw this interplay very heavily during the fundraise. There are two trends that you're pointing out, Christine. The first is investors do recognize that this is economies of scale business. Whether it's a one-stop shop, or exchanges, it's classic network effects driven business. What that means is the big are going to get super big. So for that reason, there is consolidation in terms of larger rounds for fewer players. So that trend is continuing. The second thing is we're sitting on a mega trend of tokenization of value. If you look at the round construct, we don't not only have some of the world's best venture capitalists, but we got corporate strategy, and we also have some of the best hedge funds coming in. Why are these three categories intersecting in crypto investments? And it's a very rare thing to see these three top players intersect, primarily because of tokenization of value. What is tokenization of value? I'll give you an analogy. If we are not happy, if we cannot accept Google and Amazon working only 5 days a week, why are we all okay with our traditional financial services working only 5 days a week? Your trading, your banking, everything works only 5 days a week. Now, blockchain for the first time proved at scale, at $2 trillion market cap scale, that these services can work reliably 24/7 in a truly global manner, and they're much more accessible. And the institutions clearly believe that this is starting with crypto, but crypto is not the only use case. DeFi, we are seeing a lot of volumes there. So that is a big reason why a lot of institutional investors and the traditional investors are coming in.
So I have a question about institutional investment just on a global scale. Do you have a sense, even from your business or even from your observation, like where the majority of institutional investment of crypto is coming from? Is it really US dominated, or are there other players that are starting to catch up? Where is institutional investment coming from globally?
Yeah, so we see US and Asia are playing a very strong role in that order. We also have, not just with FalconX, but with other firms as well. There is some interest in Europe, but predominantly it is US and Asia centered, Emily.
Interesting. All right, Raghu, we got to wrap it there, but congratulations on this raise. Really, really interesting conversation. Appreciate your insights, and I hope we see you soon. Right,
Thank you so much for having me, guys.
That was FalconX CEO Raghu Yarlagadda. Coming up, checking in on Asia and a crypto markets update with Osprey Funds.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, August 13th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Coming up, Poly Network says its hacker has returned all assets except frozen Tether. Samsung reportedly joins South Korea's CBDC pilot, and Indian-founded Rario launches a cricket memorabilia NFT platform. Let's get you up to speed from Asia to the world. First up, an update on the Poly Network hack. On Thursday night, Asia time, the decentralized finance platform announced that all remaining assets on the Ethereum blockchain had been returned, except for the Tether tokens that were frozen immediately after the attack. And in a twist to this sordid tale, the hacker has claimed they refused to accept a bounty offered by the network for returning the assets. Forecast News' Monica Ghosh has the latest.
In another open letter posted on Twitter, Poly Network confirmed the return of the assets, barring the Tether tokens, which are worth around $33 million. Poly Network has dubbed the hacker Mr. White Hat, a reference to ethical hackers who aim to expose cyber vulnerabilities, unlike black hat hackers who access systems with malicious intent, often for personal gain. According to digital messages shared on Twitter by crypto tracking firm Elliptic's founder Tom Robinson, a person claiming to be the hacker said Poly Network had offered a bounty of $500,000 that would be paid in return for their white hat behavior once all the assets are back in safe hands. The message also promised the hacker they would not be held accountable. The hacker said they hadn't responded to that message, but that all monies would be returned. But while the story seems close to a happy ending, a hack overnight saw crowdfunding platform DAO Maker losing $7 million. For Forecast News, I'm Monica Ghosh.
Meanwhile, it looks like Korea is getting ready to dial up some CBDC action. South Korean electronics giant Samsung is reportedly joining Bank of Korea's pilot trial to test the functionality of the digital yuan on its Galaxy phones. Forecast News' Lucas Caccioli has more.
For Koreans, wallets holding paper fiat could soon be a thing of the past. If the Bank of Korea's latest pilot trials work out, it could be as easy as pulling out a Samsung Galaxy phone. According to local reports, Samsung is joining the Bank of Korea's CBDC pilot program. The country's central bank-backed digital currency trials, in this case, will be reportedly focused on sending remittances to other phones or connected bank accounts. If successful, it could mean greater ease in transferring money in and out of the country. According to the World Bank, personal remittances sent back to family in South Korea account for 0.5% of the country's $1.63 trillion GDP. That's about $8 billion. In a Korea Times report, citing an unnamed source, Samsung will also test mobile payments using CBDCs with no internet connectivity, possibly via Bluetooth or other alternatives. The first phase of the pilot program is due to run until December. For Forecast News, I'm Lucas Caccioli.
And finally, cricket becomes the latest sport to be bowled over by the NFT phenomenon. Indian-founded tech company Rario has partnered with Polygon Studios to launch a platform offering officially licensed cricket NFTs. Now, Rario says the platform will enable fans to collect and trade some of the most iconic moments in cricketing history via NFTs. It has already partnered with several international cricket leagues, including the Caribbean Premier League and Sri Lanka's Lanka Premier League, to do just that. And Rario also says it's working on collaborations with the Board of Control for Cricket in India and Cricket Australia. That's not the only cricketing NFT tie-up to be announced this week. Former Australian Test wicket-keeper and batsman Adam Gilchrist has signed up to be the global cricket ambassador for Australia's Sportimon go-to-market their cricket-related digital collectibles. While cricket might not be huge everywhere in the world, in countries including India and Australia, it's a little something of an obsession. Indeed, both Ahmedabad in India and and Melbourne in Australia have cricket grounds with official capacities of over 100,000 people. And according to cricketsecrets.com, the sport has a global fan base of 2.5 billion people. Now that's one heck of a potential market for more NFTs. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's take a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently at $46,633. Bitcoin charging up about 4.5%. And the CoinDesk Ether price ETX index is at 32.39. ETH also advancing 4.3% over the past 24 hours. And the new DFX, CoinDesk's DeFi index, is up $712. It is also advancing 5.3% over the day. And joining us now to discuss the crypto markets is Greg King, founder and CEO of crypto investment firm Osprey Funds. Hi there, Greg. So, as I mentioned before, profit taking happened yesterday. We saw the crypto markets go down. Now they're back up with over $46,000. What's your outlook on the crypto markets?
We remain bullish. You know, we got trapped in a sideways channel there for a little while from 30 to 40,000. And I think crypto investors are not used to that. It's either going up or it's going down. But we were consolidating. And I think with the breakout past 40,000 signals some positive upside here going into year end. As far as an end target, that's hard to say. We could get into six figures. I know people were calling for that earlier in the year, and then that sort of died down. We don't put out price targets, but we're definitely long-term bullish.
So Greg, as I said earlier in the broadcast, we're seeing volumes are about a third of where they were before China had this crackdown back in May, and yet we've had these large price moves. What do you think is happening here? Is it just a few big players going in and maybe perhaps moving the price around and creating a bit of FOMO? Do you see actual institutional interest or actual retail interest, or is this sort of, I don't want to say manipulated so much as it is just a few players going into a very light market and pushing prices around?
Well, I think you've seen an improvement in the futures contango situation, which indicates that institutions are more bullish than they were. You also have, I think it was a report by Into the Block that came out that said that a lot of the purchasing recently was from people who are already long and already profitable. So I think some of the long-term holders were sort of buying the dip. I see this period as a very much a churning period. You have these cross currents, right? You have the regulators coming out. Gary Gensler said a number of things that could be construed as negative towards crypto overall, but perhaps positive towards Bitcoin as sort of the OG investment whose status as a non-security is pretty solidified. So I do think there's a bit of churn still happening as we move, and not a ton of volume, as you said, but I think that'll sift out over the next couple months, and I wouldn't be surprised to see a really positive move in the fall.
Greg, can we just talk a little bit about what happened over the past week or so? Because we are kind of in this real summer doldrums in the market. And then, Bitcoin has basically been up, I think, around 8% over the past week in the midst of regulatory news that looks pretty negative on the surface. So just what is driving that in your opinion?
Yeah, no, it's a great question. I don't obviously have the exact answer, but I do feel like there's a move towards sort of back towards Bitcoin right now because there's been a lot of rhetoric around the space in general, and certainly around anything that's not Bitcoin or Ethereum. And the issue at hand is whether or not these are securities, whether or not they can be traded on the platforms that they're being traded on currently, whether or not investors or intermediaries have certain obligations that aren't being met because these aren't regulated the way a broker-dealer would be, et cetera. So in my view, there is a little bit of kind of divergence there, but you haven't seen a huge uptick in Bitcoin's dominance, really. And that's probably been tempered because Ethereum is also very hot, and that's on the back of DeFi and NFT trends, which remain strong. So there is that kind of tension, and like I say, I wouldn't be surprised to see more of a divergence as we go into the end of the year.
So Greg, ETFs, that's something that you believe, at least prior to a couple of months ago, would happen sometime this year. Given all the regulatory interest now and focus in Congress and elsewhere, do you think that's still happening by December 31st, or are you pushing out your projection to, say, 2022, 2023?
Yeah, I think I've never really been one to say that it was happening this year. I think what I might have said earlier in the year was a 50-50 shot this year and more like 80-20 next year. That was a while back. I think I said that towards the beginning of the year. I don't think there's any chance really this year. So 2022, you could see something. We looked at Gensler's comments, as I'm sure a lot of our competitors did and people in the space. And there does seem to be a path forward there. He's sort of telegraphing that he might be open to essentially the more highly regulated approaches you can take to launch a ETF. The caveat there is that probably includes futures instead of physical Bitcoin. And so that would be a slightly different product and come with certain limitations, et cetera. But we could see something next year.
Yeah, and we do see some investment firms changing their plans. Like Valkyrie is now reconstructing their ETF to incorporate futures. But Greg, we got to wrap it there. Thank you very much for your insights. Appreciate your analysis. That was Osprey Fund's CEO, Greg King. Coming up, a $1 trillion infrastructure bill with big implications for crypto heads to the House. We'll discuss. Coming next.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. The U.S. House will take up a $1 trillion infrastructure bill when they return from recess at the end of the month. Several House reps on both sides of the aisle are pushing back against a crypto provision in the bill that broadens the definition of broker for tax reporting purposes to include miners and developers. Joining us now to discuss is Aaron Tilton, former Utah state legislator and CEO of crypto platform SmartFi and energy infrastructure developer Blue Castle Holdings. Hi there, Aaron. Good to have you on the show. So as a former Utah state legislator, I'm really curious, when you saw Senate lawmakers try to address the issue with a compromise crypto amendment brought before the U.S. Senate for unanimous consent, and one lone senator, Alabama Senator Richard Shelby, objected to the amendment because he didn't get his war money approved. What was your reaction when you saw that play out?
Well, first of all, thanks for having me. I think that's very typical, right? When you look at legislation and when there are issues that crop bills that typically are not topical to it, infrastructure related to taxation on cryptocurrencies. A lot of people looked at it and said those two topics don't really go together. It's really just kind of a money grab where they're looking to enforce reporting, and you have another senator try to push another agenda in terms of military funding. You get this kind of mismatch of a lot of topics, and I guess the old saying is that legislation is kind of like making sausage, but I would add that in legislation, there's more rat excrement, right? It's a crazy process and something that when you watch it, a lot of times it doesn't make sense.
So this infrastructure bill is clearly just the beginning of crypto being debated in Congress. And I think the question for me is, how do you get more lawmakers to actually spend political capital on this issue, right? Because there's so many things that they're fighting for and they have to answer to their constituents. So what would make more kind of local politicians want to fight for the cryptocurrency industry?
Well, I think first off, you have to be engaged. One of the things that we've done 2 years ago, we invited Congressman John Curtis, who is my House member, to speak at one of the conferences we sponsored, and we had him involved in a organization, the Chain Crypto Mining Association. So we engaged them early on and often, letting them know that the things that are involved in cryptocurrencies are impacting their constituents. And frankly, you have to let some of your money flow as well. You've got to donate to their candidates, to these candidates and to their causes, so that they know that you're interested, you have resources, and that when issues like this come up, you'll be engaged, and that their constituents will be engaged, and that they know that this matters to them. That's the number one way to make sure that what you're doing matters and it gets their attention. And so we've also reached out to John again, Congressman Curtis, to make sure that this is on his radar and that he understands that this was going to come before him in the House. He's also a member of the Blockchain Caucus.
But I guess the question for me is, why exactly would this matter to their constituents, right? At least look at the issues that we're talking about in the infrastructure bill specifically. You know, crypto advocates are warning that miners or validators or software developers will leave, but that doesn't really affect a critical mass of Americans, right, in most of these places. So how do you make the argument that this is really important, or that they should actually care about something like this? Because I just feel like this is going to come up again and again.
Yeah, and I think you're exactly right, is that the issues cannot be framed in a form of debate that limits it to maybe a highly technical kind of structure related to either DeFi. I know that the amendments are seen as trying to basically carve out DeFi or technologists who are developing wallets. That's not a very broad platform, and that doesn't frame the debate as impactful to most Americans. And the way that I would frame this, and that we have with our legislators, is that it's a tax issue that's going to impact a lot of retired Americans, or that are going into retirement, or they're looking to add cryptocurrencies to their retirement portfolio. It's not just about trying to carve out technology. There's a lot of innovation that goes on in this space, but until you can tie the technology in a way that impacts daily life for investors, most legislators are not going to see it as a mainstream issue. This has actually helped bring that to the forefront, where they're having this debate, and now crypto has kind of taken center stage in this kind of, what I would say is a little bit of a legislative wrangling. I'll give you an example. Just recently, a few months ago, we converted all of the stock, virtually all of the stock in our company, to our internal token. So our shareholders who had been in our company for the last, some as long as 14 or 15 years, are now faced with the fact that they have to look at their investment as a cryptocurrency and not a share anymore. So the taxation on this now is framed differently for them. And most of them are used to the reporting requirements that are going to be implemented in this bill, and look at this as a way that they can engage this structure in their self-directed IRAs or in their retirement accounts. And so you bet they're absolutely interested in this topic, and they want to know, how is Congress going to address the taxation that they may face with our token? That's when people get engaged.
Aaron, I kind of want to shift the topic just a little bit to green mining. You have a lot of thoughts on that. You hear the likes of Elon Musk, who came out and criticized the way Bitcoin is mined. Do you think that's a lot of people just talking their book? Somebody who, for instance, like Elon Musk, who's in the business of selling credits and selling solar panels and things like that. Are we seeing pressure on the miners from people who have an interest in getting miners to do certain things in the way they mine for their own benefit?
Well, miners as a community and kind of their business structure, they're kind of siloed. They're kind of the unknown entity around cryptocurrency. they're often talked about, but seldom heard from, and people don't recognize a lot of role is. So I think, to your point earlier, it is a little bit about Elon Musk kind of, eating his own dog food, right? I'm not sure that he would know where all the electricity comes from to power his cars. In fact, that's kind of an unknowable thing. But in terms of a portfolio for clean electricity, miners know exactly where their electricity comes from. And given the opportunity economically, they'll make the shift. But it really has to do with the competitive nature of mining and the source of electricity. And a lot of our customers were miners. They had relied on hydropower, which is very clean, obviously, and very green. But the overall portfolio in terms of where your electricity comes from is very nebulous. But what I think you'll see is a lot of consolidation. The what I would call industrial scale mining, which are quite a few of our customers, they're interested in both adopting larger scale clean energy like nuclear power, which is how we got into this space in the first place. They're interested in making sure that they can be competitive at scale. And when you start to get at scale and you talk about the combination of nuclear power with hydro, that is the confluence of those two characteristics of that energy source. So I think it's happening naturally. I don't think you need a lot of legislation as we talk about our government mandates or tweets from Elon Musk for this to happen. It's happening anyways because those resources are the most economic and they have a broader implication when it comes to scaling out the networks.
Right. Aaron, I wonder your thoughts on this, that, some folks are worried that if the United States overregulates the crypto industry, that could drive miners out, and that would set back the clean mining movement about 5 years. Is that something you foresee or agree with?
I think it's a concern. You always have to be concerned about regulation, right? I think Ronald Reagan said the 9 most feared words in the English language: I'm here from the government to help, or something like that, And so I think that is always a concern. And while you always have to be engaged early, frame the debate around the industry, what we're trying to do, and the appeal of cryptocurrencies to the average user and to kind of the kitchen table conversation for legislators. So as it relates to how would that impact miners or people that are developers? I think so. I think if you have these overly broad kind of dragnet kind of approaches to legislation, you're going to set back the structure in terms of how the industry is able to innovate. You're going to drive technology overseas. And I think that's always a concern. So, and that's what we're trying to get accomplished in pushing back on this legislation to make sure that the right terms, and it's a narrowly crafted, targeted provision that, frankly, in my opinion, needs to happen, but not in a broad way.
It's a fine line to walk, and a lot of work needs to be done. Aaron, we got to end it there, but thank you for your insights. That was Aaron Tilton, former Utah State legislator and CEO of SmartBuy and Blue Castle Holdings. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. Have a great weekend, guys. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.